Wednesday, August 21st, market analysis. Stan Ehrlich. Good morning, 10:05 California time. And I start with stock market indexes and the futures markets, and sometimes go to seasonality. Like I'll be talking about the October lows I expect will be coming up again this year, like it has about 90+% of the time since 1993. 30 years plus. I only missed 3 times. Did the work, know my numbers. So the odds are very high that we will see, like last year and the year before was spectacular, October 16th, 13th, I think, of 22, and October of last year also, late October. Now, we in some cases are overbought in the stock indexes or extremely close to it. Today's high is a slightly higher high than yesterday, which was slightly above the day before. It would appear that the market may be losing upside momentum. We don't have any bearish engulfings at this point. If we see some new lows, it would be relatively easy to have bearish engulfings, but we need also, for my signals, the red daily bar signals, which you'll see usually very close to tops or the exact high day frequently, or green for buy signals on the low exactly or very close. Some just plain don't work and we take a loss and we get the heck out quick. All automated. So here we go. Overbought conditions up near previous highs. A little bit higher would be okay with me because I would like to get the other indexes officially at 75 or higher on my custom RSI, which we came up to 74 something in many cases. So one more shot up, quick, sharp, that's it. Or now, not quite sure. Market's still up a little bit at the moment, been wobbling back and forth. Let's take a look at the 5-minute chart on the E-mini. As you can see, we are still long from August 8th, as I've shown you every day since. And my yellow dotted line is my automatic 100% trailing stop, automated, called our STS Smart Trailing Stop. It is influenced by a lot more than just the price movement, but that has something to do with the way it moves, as well as momentum and so on. So our stop is now way up here and locking in a great, and I use the word locking, and that's not really a legal word, great profit on this trade, which is totally unexpected. Back here, I didn't think the rally was going to carry very far, and I was skeptical about the signal working. Boy, was I wrong. But look at how we're kind of going sideways in here with a slight higher high since yesterday morning, or this beginning of yesterday's session, I should say, which is the day before afternoon. I think I'll be taking, and our stop did go up some today. I think I'll be getting hit on my stop today. Not quite sure. I'm real close to getting out, and I think we're real close to turning down. Next, Spider. Very similar. Officially, so far, the only one overbought. Got above 75. Not by much, but a 1/100th or 75.00 is good. And that's exactly what it's done. So like the previous top, overbought conditions, but I'm not getting any bearish engulfing yet. If we get a bearish engulfing very soon, it doesn't have to be overbought on that day, I'll get myself a red sell signal and be a little more confident the market is starting a decline from a double top formation into the October lows, which is now, give or take, a little 6 weeks away. Next, Spider, 5-minute data, up, currently trading yesterday, today, very much in the same area, topped out before. It's a little lower in price. Double tops don't have to be, and are rarely the exact same highs or lows for double bottoms. Next, QQQ, just simply a big retracement, not particular any resistance area that I can peg. I do have to point out there's an old gap back from July 23rd to July 24th that I talked about at the time. It tried to get closed, and it was partially before that bearish engulfing caused bang, bang, 2 big, huge down days. In some cases, like you'll see in the YM, it actually had a formation and it got a downside objective fulfilled almost exactly on that break. Okay, back up to resistance. We're not quite overbought, but really, really close, 72, 72 at the moment. I could get up to that area and maybe even close that gap. A little scary if it gets that high, but it would get overbought. Next chart. QQQ, short-term 1-minute data. Today's high is interesting when you look at the detail day by day. It's in a little level of support and resistance. I wouldn't call it particularly profound, but you can see at today's high that we got some other evidence market had trouble going up and or going down to and through that level. Next, the NASDAQ, we got an ER sell signal on the exact high day. Great trade, both on the ER1 overnight, lasted only 1 day. I could have slowed down the stop a lot, but the retracement the next day caught our ER3 new short, and we stayed in that. There's the trailing stop all the way down to almost the bottom. It was the low day. Well, we didn't get that close to the low, and we got out. Huge profit, great. A couple of days later, 3 days later, we've got a buy signal now, and we're still long. That is our trailing STS stop, currently around 19,546, give or take a little. Great, but I don't trust this rally, as I've said all along. I am looking for all of a sudden some kind of major sell signal, and it, in my opinion, should happen real soon. Next, there's the same exact trade in 5-minute detail and near the close on the 8th of August, and we're still hanging on to it. There's our stop, moving sometimes several times in a single day. It depends on the way the markets move. Next, the YM, we got the exact high day also, and this rally is coming up against a bear trend line in this case. We also got great buy signals at the bottom, the beginning of a sharp rally in the last week or so. I don't know. There's too many reasons to think it's going to scream higher and make new historic highs at this point. I think it's going to stall out and start to head back down, and that's going to lead me toward that October low. I keep mentioning it. The YM short-term data chart might have had a bearish engulfing today. I can't quite tell the exact numbers. It's so close. Today's high could have been just a tiny bit above yesterday, in which case we do have a bearish engulfing. But there's no sell signal because it's not an outside. Yeah, it looks like it. It's not an outside down day with overbought conditions. Next, we've got the Russell buy signal on the way up. Unfortunately, not the lowest low or even that close, but it worked. And we're in a major area of resistance. And I'm looking for another move down to at least the lows on that early August break bottom, but lower than that for everything. The Russell 5-minute chart. Okay, bonds. Bond futures are rallying nicely. This has become a very interesting story. We have what I believe is a head and shoulder bottom in both bonds and notes. I'm calling the low March 3rd as the first shoulder low, right here. We had a bullish engulfing during, a little bit too early, but the low. And at the bottom of the market, the total lowest low for a long time to come and past was a bullish engulfing ER buy signal. Up you went, and then down again into approximately the right time frame for the last shoulder low, timing-wise, to occur a little earlier than I expected, about a month. But this area in here, I believe, is the last shoulder low, specifically exactly the date of April 25. So now the pattern's complete. You can draw your neckline in. You think the market's starting to turn up. It started to when it got to the trend line, which is the neckline. It started to have a little trouble, backed off, and finally started to go through the line with a great upside breakout, classic retracement. And here we are coming up close to new highs. It's just not new highs. It'll be also new highs since all the way back to July, over a year ago of last year. So quite a time period, perpetuating the fact that this is a head and shoulder bottom and the neckline's correct. And the upside objective is about 130, 140, almost 140 exactly. So here's the other story. What happens if it stalls out here and we're getting close to overbought, does not make a higher high, or if it does, it's not by much. And then this other faint yellow dashed line I've drawn in could be a brand new neckline. I don't see the weakness yet. And then I'm thinking it'll bounce back down to the old secondary, at the moment, the important one, neckline, and stall out in this area and in October, in about 6 weeks, in my green circle. So I've got a price range and a time frame inside of which I hope I get a major buying opportunity, a low, and a bullish green ER buy signal. We'll see. I've done this before, not always works well, but I came super close a couple of times, and I think pretty much a bullseye once also. I'm talking about the last year, year and a half. If I remember correctly, maybe it was in silver or something. So, interest rate futures, I don't expect it to go screaming straight up. I know about September, but markets move on anticipation, and that rally is basically the anticipation of that news a couple of weeks ago. So that's it built into the market, in my opinion. So if there's any hiccup in the September expectation of any sort, that probably will cause it to dip back down a little bit. And I'm guessing the fundamental situation, something like that might occur. Next chart, 10-year notes, exactly the same story. I don't know if it's going to break down into my little green circle here in October. That's why the question mark with the circle. But if it does, I'll have a complex head and shoulder bottom that's bigger than the one we're dealing with right now, which at the moment is working perfectly. If this pattern, which broke out classic, tested neckline classic, timing is just a little bit off, which is not unusual. The pattern's got all the body parts to it, etc. It's even got a small head and shoulder bottom as part of the head, which worked great. I talked about that at the time it happened back in October, almost a year ago, period. So this big one could end up being a complex head and shoulder, double shoulders, for example. And then I would include in the pattern the October time frame of 22, when it bottomed out in October of 23, and now maybe coming up October of 24. It's a big one, 2 years. Quite a long time period call on my part, because I don't usually do these longer term things, but it looks very plausible. Next, crude. Big pennant formation I got outlined. Rally stopped at resistance in the trend line, broke down to the support line at the bottom, rallied up close to resistance in the bear trend line across the top, and now we're getting caught between a rock and a hard spot. So maybe this trend line will hold again and it'll bounce again. We're obviously getting squeezed out toward the tip of the formation over time, but we'll see how it handles this line if it can get down there. We're not quite oversold, so we got more elbow room down. Natural gas may be forming, and today is not doing any damage, but I'd rather see it go up than down. And I don't want it to go below the low of Monday. That will throw my timing off some, and it's causing jeopardy that the last shoulder could just simply fail completely. Right now, the timing has been good. The price levels are good. The neckline's almost dead flat, which is unusual, but it does happen. And therefore, if it works correctly, the upside is 2.737. But I got to have it stop going down and start to turn up ASAP. And then the rest is going to follow, we hope. Next, new lows in support, heating oil, almost oversold, 25.46 at the moment. It's prime target for an oversold condition and a hopeful buy signal in a major area of support. Even though it's made slight new lows for quite a while, this looks like it could bounce again real soon, back up to 24, maybe 2.45, 2.5, and a chance it'll be up a little bit more than that. Next, gold, silver, platinum, copper, then beans, oil, meal, corn, wheat, cattle, hogs. So here we go. Overbought on gold. A little bit above a bearish resistance line, but it's staying there today so far. So that might end up being an upside breakout, but the overbought condition causes me a lot of caution. And if it dips right away here, back down below the line, probably it's going to slide all the way back to the support line. And if it breaks out below the support line, which is not out of the question, I kind of think that could happen in a few weeks, then the downside objective is 2178. But so far, we just might stop here and then stop going down at support. Next, silver and platinum have the same complex head and shoulder top with a head and shoulder top as the last shoulder of the larger pattern, a head and shoulder inside a head and shoulder, which 10-year notes had for bottoms. I showed you that. The small head and shoulder top, which was the last shoulder on the big one, worked in about 2 days. Boom, boom. Breakout day, little follow through day, and the next day it met my downside objective. But that downside breakout for the small pattern caused the bigger pattern bearish breakout on July 19th. And so this rally is not out of the realm of expectations. I think it should stop very quickly here and probably not much higher. We are almost super close to overbought. We got up to a 74.62 RSI yesterday, incredibly close to 75 or higher, and we're just hanging in there today. No reversals, terribly close to overbought. I think we're about to stop rallying and head south, in which case my minimum downside objective is eventually 24, which is the big pattern, head and shoulder top, bearish objective. Next, platinum. Head and shoulder in the last shoulder of the larger, which the larger, we got an ER sell signal on the exact high day. I don't put these signals here, the green and red marks. They're automatic. They're the result of the code. My, oh gosh, maybe 15 years of work on the ER signals. So small pattern, downside breakout. Within a few days, it got to the minimum downside from the small pattern. Bigger one has broken out. Now we've rallied a little. We already had one rally. I don't see the need for a second, but it's there. And I don't see it being a detriment to the bigger pattern. Minimum downside objective, 810. I think it's going to turn down soon, break the support level, and keep on going. Next, copper. We got 2 buy signals just recently. The lowest one is almost the low of the trend, but not quite. Nevertheless, the second one, we are still long from the ER1 overnight position. Our yellow dotted trailing stop is now protecting a small profit. Almost got hit today on a dip, but we're still in there. And they recovered completely to be just a little bit higher on the day right now. I'd love to see a new high and a new high close, and that's exactly what I think is about to happen. We're not that close to overbought, and the upside objective momentarily is 4.28, and maybe we'll have some trouble there, but we'll be making more money in the meantime. Next. Too bad I didn't get any bullish engulfings. Got oversold in soybeans. This is November beans. And I think a short-term rally up to probably at least 10.15, maybe 10.37, it has started. I'm very bearish, intermediate to longer term, but short term, which I mean by a week or two, I think a rally could happen, and then it'll stop and turn down. Same kind of commentary for soybean oil, oversold, bear trend, bear market, very bearish still, no change in long-term opinion, but a little oversold lately, and a little bounces started apparently, and I don't think it's going to go any further than approximately 42.60. Meal, almost new lows for a long, long time period, but not quite. I think we're going to break the 299 level. I don't expect much more of a rally at all, and maybe for only a week, maybe less. Don't trust the rallies. I think the support level is going to be touched again, broken below 299, and then the next bounce potential will be 288. And I don't think if there's a bounce, it'll go very far for very long. And I'm expecting eventually a move way below 280. Next, corn has already done all of that I talked about way back in June. Major downside breakout, rallies in a bear trend, periodic oversold conditions. Right now, we're testing support. No particular major buy signals that have worked, although we have had 3. These signals are sometimes part of the bottoming out process, but not necessarily, and often they are, the lowest low exactly. Wheat, we almost got the lowest low exactly. And so far, it hasn't made any lower lows. But today, we are making minor new lows for a couple of weeks, coming close to jeopardizing that long-term signal, which has already worked great. It already went up for a week or so. We already had a couple of good trades. But now, maybe we're not forming a bottom I talked about starting probably yesterday. If we do close where we are, the head and shoulder bottom is still a possibility, but we're very close to being too far down, too far to the right, and that kills the pattern. So we're about to lose a head and shoulder bottom potential and just keep trending lower. I mean, I've been bearish for grains for a long time. I have no long-term change of opinion, no intermediate change of opinion, only short-term rallies that might develop because of oversold conditions and or patterns that are probably pretty small like this one. But it could be dying now. Next, cattle. Now oversold today, first time in a week or two. Last time we got a bullish engulfing and it rallied a little bit. Overall trend is now kind of turning down. Look, you had a trend line across the tops, broke out of it to the upside back on June 14th, simply rallying all the way back up to about the same prices that we topped out before back in September of last year, which, by the way, we got the top of the market to the exact day. And that was September 19th, 23. What a bear market after that. So, big move up, broke a trend line, but after a test of the trend line and a move back up, we formed a little bit of a double top at resistance, overbought conditions on both occasions, and down we come back into this long-term bull trend line. Problem. A double top formed. The minimum downside objective I've got with my little stick here, measurement, the depth of the formation, you take from the lowest low to the highest high, just like that. And then you take that amount and you go from the lowest low between the two highs and measure downward. And guess what? Today, we finally got to the minimum downside objective. But another major important factor, and I'll erase that objective now, is a major downside breakout yesterday and a big down day, new lows for months. More follow through today, now getting oversold. So you expect a bounce. But back up to this trend line, probably. Resistance, probably. And we've started a longer term bear move. My first downside objective is going to be let's call it a little below 170. And I'm not going to be surprised if we get down to 160. But we're ready for a small bounce. Hogs, major resistance, poking at it again today, top of the wick, right up against a previous high a few weeks ago. So minor double top and resistance possibility. We'll see. I think it's about to roll over and come down. Back to the E-mini, firm. We're up about 1.5 points on the spider, 14 on the E-mini. You know how I feel. You guys have a great day. Profitable trading to you.